Hello, today is Thursday, the 12th of April, 2012. I'm on NetDania's chart. The link for NetDania's webpage is in the more information box, or you can just type in Google NetDania, and that would also bring up this webpage. I wrote in the chart section. We're looking at the 1 minute time frame, and I'm bringing this up right now because, quite frankly, this is a beautiful looking setup when you're looking at this sort of pattern. And this is a pattern for this to go higher. Really, it should be doing this now, or it wouldn't be a surprise if that was the case, given what I'm seeing. Now, what happened was at, you can see the time on the bottom left of the screen, 10:35 a.m. time. Right now, it's 11:50. At this time frame, it came up to a high of 32.417, right in here. And then it's pretty much went sideways. This high at at 11:35, 41.2. So pretty much at the most recent high. So what happens is when you make a high and it's been a decent amount of time, or even just candles for that matter, before you go to the high, the realistic odds is that you'll find some sort of resistance. But by making a higher low and then retesting the level is just extremely powerful, and that's exactly what the case is right now. Let's just move this out to the 5 minute time frame and see where we've came from, because this thing really started to break out at around 9:20 a.m. this morning. It came out from a low of 31.53, so it's up about 90-ish cents or so, which is roughly about 3% this morning so far. Let's keep on moving out these time frames. 10 minutes, it's the same thing. We have the 15-minute time frame, same thing, as is the 30. The 1 hour time frame, we had this high at located on April the 8th of 31.12. So some would have been saying, okay, now we've had this nice little run this morning. I think this thing's gonna stop at 32.12. Where we're going to either go sideways, or we're at least going to retrace, maybe test some of this previous resistance area of support. That's what I'm looking for, and well, obviously that didn't happen. So when that doesn't happen, look at two things to occur. Number one is that it comes and finds that area as support rather than resistance, and within the 1 hour time frame, that did not happen, or at least not as of yet. It still can. Or it is just going to keep on going to the next level, because when you're going higher, you're at a level of resistance where you're supposed to, like I say, either go sideways or down, and it doesn't. That can often mean you're going to the next level. The same is true on an inverse scale when you're going down within support levels. 2 hour time frame, we can start to see some of these other highs. Now, the Fibonacci levels within the daily chart that I've been showing you within my original charts show 32 and 2/3 and 30 even. So 32.66 is pretty much the area that it's going towards. And the more often you test support and resistance, the more likely it is that you are going to take that level out. Looking further within this chart, after we made this bottom on the 4th of April, come up, we make this high. Okay, so it sells off. Well, it's really important to make a higher low, which it did, because it made this higher low at the 8 o'clock hour on the 10th of April, and it is thus broken past this resistance field, which has now made a higher high, and we've had one higher low. So we don't have a pattern of higher highs and higher lows, but we do have a pattern of one higher high and one higher low. So again, last time we had to have a higher low above pretty much 31. We came down to 31.17. Now we need a higher low above that. You really don't want to be close to the previous level. Right now, I would pretty much want to see it at like 31.80 if this is the general area where it decides to top within this market. Let's move within the 8 hour time frame. And we're looking back at the top of 37 and change, and it's been a long sideways consolidation, basically telling us that, yeah, indecision, but it's not just a bear flag. It's going to head lower because of this 32.66. If it really gets by this resistance area and then breaks it again, that's pretty bullish. So even though it's the that 32.66 I said, it's a bit more bigger, roughly around 33.05. Because that was resistance on 1, 2, 3 occasions. again, it's okay to find resistance and pull back, but let's assume that it does manage to go to this level, and then it pulls back with the higher low down to, and even where we are now, back again to this level, then that increases the chances that it takes it out, and really what would be needed to spark this thing to continue within its gains. Now, we didn't have, as of yet anyway, a move down to 30. So therefore, like I said before, if we do break above this level, it would not surprise me if we have some pretty fast moves, at least back up to this 37 to 38 level. But that's stating that it does not go down to $30 per ounce. Thus, I would look at this as a failed breakdown below the 32 2/3 level. And oftentimes from failed moves can create fast moves, which is the reasoning for why I'm mentioning that. Whether that's the case or not, of course, what I want or even what I think or even what the odds state doesn't mean it's going to necessarily become within that way. And just a quick little long-term look at this within the weekly time frame. Again, you make these two lows roughly around 20, just a hair over 26 an ounce. This high was higher than the previous high, and then that means we have one higher high. We do not have a higher low yet, but if we come back up and just go to this area, then this would be its new low, which would be its first higher low, its first higher high, and really getting this thing ready to get going. But for there to be just a lot of conviction, then I really need to see this closer to around 40. And the reason for this is I take the high, which is $49.81 a share. So we'll take the $49.81, and we'll divide it by the low, which was $26.10. We got to get above 61.8% of this retracement, so we'll go x to the power of y is 0.618, and multiply the low again, which gives us almost 39, which is 38.92. So for this selling to be a failed move, it needs to break above, hold above, and stay above 39 per ounce. Still a little bit, obviously, to get there because that's a 20% move from now. And just a quick look at the 1 minute time frame again. What occurred, which you can see this, is that this period broke above the previous high in here. And again, making these higher lows is important. So the last significant higher low would have been right in here, roughly around 32.30. And therefore, it's still showing as if it's ready to potentially make this higher low, but if it doesn't, and we start to break down below into the 32.30 range when you see something like this, then the setup that was starting to look very, very bullish has changed. It's not bearish by any means, but it's becoming more neutral. Maybe we'll have some more sideways action, or maybe it needs to consolidate just a little bit more, because we got this breakout low, which we'll take as 31.51 at the bottom. And so far the high is 43. So 32.43 divided by 31.51 to the power of 61.8%, which means that if it were to go lower, 32.07 is the number. If it were to continue to go lower, then I would be looking for it to go to 32.07, which would be roughly in this area in here. If, of course, it really breaks down on the 1 minute time frame, breaking down below this low and really down below 32.29. Any confirmation break below that, this is short-term analysis, but this works for other charts, other time frames as well, that when you do just whatever, you break below it, say I was seeing this break go below, we're down to say 32.22, and then it bounces up to 32.29 into here, then I'd be saying to myself, then it does look as if it's ready to go down to the next significant Fibonacci level. If I want to make a play in, this might be an area where I can short at 32.30, which I hate doing in an uptrend, and then make my sell order roughly around 32.07, put a stop loss maybe somewhere up here, and I'd like my risk versus my reward if a setup like that were to occur. Now, I already stated that this was a good long position, so if you're in here and you just bought, say, right in here, and right now you'd pretty much be around even or you'd be lower. Where would you put your stop? Well, either one would be at, say, 32.30 here. Maybe you put your stop below this. Or, because the Fibonacci level was 32.07, you're thinking, well, maybe it will retrace the 38.2% down. So I'm going to go 31.98, a couple cents below a significant Fibonacci resistance level. Okay, I was kind of hoping when I make this video that I would see this thing really start to break out. So I'll give it a couple more minutes and we'll just go to the gold to silver ratio. In this NetDania, when I go to instruments, I can go to more instruments. You can't see me doing that. And then within precious metals on NetDania, you can see the gold to silver ratio. So there we have it. Ooh, this looks a little choppy, a little volatile, but whatever. 5-minute time frame, and you see in that the gold to silver ratio is going lower when the price of silver is going higher, which is fairly straightforward. 2-hour time frame. See, now we can start to look at Fibonacci retracement. We know this is the high, which is 52.78. So we need to take the high of 52.78 and divide it by whatever the low happens to be. I'm not just going to take this low here because it might be even lower than that. So let me just go to 4-hour and see the validity of this low. Well, right now it's at 50. Okay, so we got 50.21. So let's take this number, divide it by 50.21. I can tell just by looking at this that it's broken below the first Fibonacci level, which would be somewhere in around here. So let's just take a look and see what that level happens to be. Of course, I've forgotten what the low is, but I can just 50.21. And we'll multiply that by that level, which is 51.78. So yeah, like I said, I can see that it's broken below this line. So therefore, if you came down there and you were saying, okay, if you're finding some way of playing, I'm surprised there's no ETF for the gold to silver ratio, to be honest with you. But with that being stated, if you're like, okay, I want to go along on the gold to silver ratio, well, so far you've been wrong. Whether you were stopped out or not, it would be getting close if you haven't, and maybe your stop would be below the next Fibonacci level. For if there's no support found where you're supposed to in here, then, like I said before with the last silver market, I'm expecting either to find resistance at this level or to go to the next one. So now let's find out what the next level is. We'll do this to the power of 38.2% now. And multiply it by the low, which would be 51.17. Which would be roughly in here. So this is pretty much telling me there's a good chance that in the next little while we'll probably make it towards this level, which would mean that gold and silver would probably both be going higher. Let's go back to the silver spot price and see where we stand on the 1-minute time frame. And it's just consistently testing this area. The more often you test this resistance level, the more likely it is that you take it out. It's, to me, just screaming as if you want to take it out. Stick your stop below here if you want to play a good risk versus reward kind of game. If it pulls back, I'd be expecting a higher low, roughly at around 39 cents in this little area here where there was resistance for about 5 minutes. But I'm going to stop this right now. You're basically looking at a chart that should continue to go higher throughout the afternoon. And thank you for watching today's video. Bye-bye.